Welcome to the Me the Money Show. I'm Dan Barnes, Editorial Director at Markets Media Europe, and joining me is Terry Flanagan, Editor at Markets Media. Terry, welcome back to the show.
Hey Dan, thanks for having me.
Good to have you back. So tell us, we've been looking a bit this over the last quarter at the automation of trading, but in the last issue of GlobalTrading particularly, you focused on automation in fixed income trading. What do you see as being the key drivers there from the buy-side perspective?
Right, yeah, the GlobalTrading third quarter issue is on its way out, really, and the cover is the evolution of automated trading in fixed income by really a couple of heavies in the space. Dwayne Middleton, head of fixed income trading, and Amit Deshpande, who's head of quantitative fixed income investment and research at T. Rowe Price. And they co-wrote a piece that's an extensive piece, really everything you always wanted to know about automation in fixed income trading, where it stands, how it's evolved, what's the current state of the landscape, and what is the future outlook. So, for example, they talked about some things, how it is still very early in the game in fixed income compared with other asset classes, certain things in fixed income, the lack of standardization, the very fragmented market, make for sometimes automation is not as easy to come by in fixed income elsewhere. But that said, it is moving forward. One of the things they emphasize is moving repeatable trades of securities to a more automated workflow, and gaining access to that data in real time frees up traders to do the real high value flow that does take a personal touch. So that's kind of, there's a lot more to it than that, of course, but that's kind of the bottom line benefit for automation, benefit of automation for a buy-side firm such as T. Rowe Price.
Yeah, and I think Aaron makes a good point in there that when we talk about fixed income, it's actually not one real asset class. It's not like equities where companies issue equities and that's it. You've got governments in there, you've got corporates in there, you've got the muni market. There's a huge range of different fixed income instruments, and not all of them are at the same stage of providing the right data into the market, support automation. There are different levels of complexity in terms of the number of instruments issued per issuer. So there's actually probably quite a long way to go. Obviously, the US rates market, the treasuries market, is actually the most automated fixed income market, I think, in the world, and certainly one of the most liquid. So we can see potentially there how other markets may evolve in the future, but that probably depends on their liquidity levels reaching the same sort of pitch. There's a question there of whether structure will actually allow that.
Sure. Yeah. Right. As you point out, it's a fixed income market is such a vast universe. It is kind of a misconception to lump say there's one broad fixed income market, because there's such vast differences between the two, areas within fixed income. But one of the other things that they were talking about was the use of artificial intelligence, which is often closely associated with automation, at least in terms of people's perceptions. But what they said, at least in fixed income anyway, the use of AI in traditional fixed income trading is really a rudimentary stage right now, especially compared with other asset classes. There is great potential there, but at the moment, it's kind of more of it's not really a now story. It's a future story. So it's interesting to see how that will develop, but at the moment, they made clear it's not like they're using AI bots every day to handle all their order flow. It's a thing. It's a developmental aspect.
Absolutely, but Dwayne joined T. Rowe within the last 12, 18 months from Morgan Stanley Investment Management. He's a real leader in this space, so sure. I expect that T. Rowe will see its trading operations evolve quite quickly on that front. One of the other areas you were talking about in this issue was also the way that the trading desk is evolving as a result of COVID-19. How is that playing out?
Yeah, certainly. Well, that is a ongoing story. It wasn't necessarily thought that it was going to be the case, say, 6 months ago, but it is a continuing story, at least through year end. So we had two different articles on that. The one was by Francis So, Francis is head of trading for APAC at BNP Paribas Asset Management, and his article was a game changer for traders. And he was talking specifically about how buy-side traders, how institutional traders who are used to going into the office every day no longer are doing that, and there are various challenges associated with that, both present day and going forward, when the expectation is more of some sort of hybrid situation between work from home and work from the office. I was talking about a few of the obstacles: ensuring regulatory compliance, lack of recorded telephone line, hardware issues, internal and external communications challenges, possible unstable internet connections. However, what he did, he was emphasized it was a positive, really, spin to the article. He said overcoming the issues required resilience, agility, and innovative thinking, and he left the reader with the notion that it has been impressive how well and how quickly the industry adapted to really a change that no one could have seen coming. So, and he was also talking going forward. He said increasing productivity and efficiency. The trading desk is always a key objective that's accomplished largely via automation, kind of tying back to the first article we were talking about. And he said, a silver lining to the COVID-19 cloud has accelerated the move and development of automation.
Oh, absolutely. It doesn't mention the COBT situation, which is cat on Bloomberg terminal, but I hear that really is an issue for some traders at home.
Yes, I've heard that as well. I'm not familiar with that personally, but I have heard it's a big 2020 story for sure.
Absolutely. And then Winter Chan also has a piece on how trading desk technology is coping in the COVID-19 situation.
Yeah. Winter Chan is head of trading technology for APAC at JP Morgan Asset Management. He's not a trader himself, but a trading technologist. And he was talking about kind of the key focus throughout this from his seat has been on operational resilience and adaptive flexibility. And one of the points that he really emphasized is that the firms that have been able to do this most successfully have been the ones, no surprise, who have built up a strong technological infrastructure over time. The firms that might have been a little behind the curve on the technological infrastructure have had to do a little more work in terms of catching up. So, and one of the other things he was saying, he emphasized the ultimate aim for trading technology teams has been to work towards a globally consistent workflow and try to simplify where possible. And he thinks COVID, to a certain extent, has brought that into more focus as well. So certainly plenty of challenges, but he also was pretty positive on the whole idea of how the industry has adapted.
That's great. So overall then, as the key themes we're seeing, automation and potentially simplification of trading operations as a result of the technology evolution, the adaptations technology, but also coping with the COVID-19 situation as well.
Yeah, I think that sums it up pretty well. And is saying, people have kind of pivoted from when this first happened to how we're going to get through the day and how we're going to get through next week, maybe, to now understanding that maybe it will be a longer term situation, and even if and when COVID goes away overnight, it's still going to be. I think the idea and the perception of working from home and what it can and can't do has changed probably permanently.
Yeah, I definitely agree with that. Terry, that's been great. Thank you.
Thank you, Dan. Appreciate it.